All right, so we finna get started on our, I call it session finale, which is the end of this trading course. And all I'm going to do is put it all together. I'm basically going to go through how I go about trading for the day. And the reason why I have you guys trading alone and I don't necessarily have you in a live trading session is because the master traders out there know how to trade alone. I need you to be able to build your confidence level. I need you to be disconnected emotionally to trading. If I have you in a live trading group, you'll only trade when I'm trading. So that means when I'm not trading, you're not going to trade. I need you to be able to make money on autopilot. I need you to be able to make money without me because I'm not always around and everybody know me. I might trade in the middle of the night, so I'm sleep in the morning. So y'all be wanting to trade in the morning, I'm still in the bed. So I need you to be able to trade anywhere, anytime, with or without someone. So that's the reason why I put you out in the jungle by yourselves because I need you to have your confidence level. Now, the next thing that I do want to mention is that before you trade, you need to do a mental state check. And basically what I'm saying is if you wake up and you have sleepy, you ain't get enough sleep or you tired, somebody irritating you, don't trade. If you don't feel good, don't trade. If you are emotionally tied to money, meaning that when you lose, you almost have a nervous breakdown, don't trade. Because here's what I'm gonna tell you, you have to take your emotions completely out of trading because that hesitation will make you get in a trade at the wrong time and you're gonna end up losing money. And so one of the things that I always do before I trade, everybody know I get up in the morning, the first thing I do, I'm gonna pray, but I'm also gonna meditate. And it's just to get some peace around me. I trade peacefully. I trade in a peaceful environment. I don't have people around me because quiet allows me to see them candles in a way that I want to see them, okay? And also give yourself some positive self-talk. So I may say something like, you know, money is attracted to me. Every time I get into the markets, I win. Every time I see my trade, I take it, I win. I do not lose. I win over and over and over again. Today, I'm finna go out there and I'm finna get this money. Today, I'm gonna go out there and I am going to win. That is what I say to myself over and over again before I even trade. So that's gonna pump you up. I am not afraid to trade. I'm not afraid of candles. When I see the candles, automatically out of instinct, I know where my perfect trade setup is going to be. I'm going to take it and I'm going to win. You finna win, Angie. You finna get into this market. You finna get this money, baby. That's what you're going to do. That's what I say over and over again to get myself mentally strong so that I'm not finna go in here and I'm not finna play no games. And what I'm going to say to you is I wait for my trade. If I don't see the trade, I do not trade. So I don't trade just to trade. I trade to find my perfect setup. So let's get started. The first thing that I do, like I said, after I do my little mental check and I get my mind at ease, the second thing that I'm going to do is I need to know what the economic news is for the day because this will determine what is going to happen in the markets. So I'm going to go to Google, and when I go to Google, I'm going to type in Market Watch Economic Calendar. So as you can see, it's already on there. But as soon as I type market, I'm going to Market Watch Economic Calendar. That's what I'm putting into Google. When I put it into Google, I am going to see the very first link says the U.S. Economic Calendar Market Watch. Why am I going here? Because the majority of this class was about trading indices, trading indexes, trading the markets. We spent all of our time for the most part on this course learning how to trade the S&P X, which is the S&P 500, the US 30, which is the Dow, and the NAS 100, which is NASDAQ. So those three indexes are influenced by the US economic calendar. So when I click this calendar, the next thing that I want to do is I'm going to scroll down and I want to find the day that the current day. So if I scroll down on this chart, we know that today was the 13th. Okay, so it's right here. So if I scroll down to the 13th, what do I see? I see that at 8:30 a.m., there was going to be a producer index announcement, and that at 9 a.m., Fed Chair Jerome Powell was going to speak. Okay, so what does that mean to me? Well, number one, this calendar is based on this calendar is based on Eastern Standard Time. So because I'm trading Central, then I know that this is 7:30 a.m. and this is 8 a.m. Now, if you look at the charts today and you look at the movement, you would have known that the market was going to get ready to short. Why did you know that? Because at 8 a.m. Central Time, the Fed chair was going to speak. So if you turned on CNBC and you actually watched him speak, you would have heard him basically say that the unemployment rate was going to get higher, it's going to last longer. The state of the economy is concerning him. What does that mean? That's going to make people who are in the markets to start selling, taking money off the table, closing their positions, and by closing their positions, it brings down the market. And people started shorting the market based on what the Fed chair said. So what that means is that at 8 a.m., if I know the Fed chair was going to talk, at 8:30, the market's open. So I'm not even trading before that. I'm going to let him start talking and see where the markets are going to go at open, and then get on the train and follow the train, right? I also knew that at 7:30, there was going to be a move. And obviously the producer price index, the actual was worse than forecast. So what does that mean? That means that around 7:30, the market may have did a little down a little bit, and then probably moved this way up and got ready for the Fed chair. Okay, so if you're going to trade, you have to know when announcements are going to happen that is going to affect the markets. So tomorrow, you know that the jobless claims report is coming out at 7:30. Import price index is 7:30. So you know that around 7:30, you may see some moves, 7:30, 8 o'clock. And also based on this information, we'll determine that when the markets open at 8:30 Central, what could possibly happen. Now, we know when it came to unemployment numbers, it tended to go up instead of going down, which is against everything. But this time around, sometimes they move the markets down and they already have factored in jobless claims. And so they'll move the market up. So let's look and see what happens tomorrow, but pay attention to the time. Also tomorrow, there's another state's Fed is going to talk at 12 p.m. Central. The Dallas Fed is going to talk at 5 p.m. So obviously that's after the market, okay? So always go here first before you even think about trading, and then write down on a piece of paper the times where there's going to be an announcement, or you can set an alert on your phone. That way, if you're in a trade, you're going to be out of the trade. Okay, or if you haven't taken a trade, it may be an opportunity for you to catch one by just trading the economic news. So that's the first place that I'm going to go. The next thing that I'm going to do is I am going to go to my trade account. Okay, so I'm gonna go into my demo account with Hugo's Way. As you can see, I don't have a chart. So what I'm going to do is I'm going to open up a chart. So I'm going to act like I ain't traded before or whatever. So here's what I'm going to do. I'm going to look at, let's say I want to look at the US 30. You can pick US 30, you can pick SPX 500, you can pick NAS 100, but let's do US 30. So I'm just going to right click and I'm going to select a new chart window. So it's going to pull up a chart. I'm going to expand this window. And then the next thing I'm going to do is I want a clean chart. Now I have a clean chart template already set up on my computer. So I'm just going to right click and I am going to go to template and I'm going to go to my clean chart because I already have it saved, guys. Okay, so this avoids me having to reset my basic standard of a chart and the candle colors that I like over again. So I just have Once I have my chart and I have my color of my candles, I just save that chart as a basic chart before I put any indicators on, okay? So the next thing that I'm gonna do is, again, I've already looked at the economic news, so I know what times to be paying attention. Now I want to go to the daily chart. So I'm going to go up here and I'm going to change my time frame to D1. Okay, so what I know off the daily chart is that each candle represents a day. All right, and so this is today. So this last candle is what's happening right now. It's today. Okay, this prior candle is yesterday. And so before I started to trade in the morning, I would have went to D1 and looked at the last candle. Well, based on my candles, the way I have it set up, white means that the price is going up and pink means that the price is going down. So if I look at yesterday's action, what do I know? It's pink. So that means that yesterday we were going in a downtrend. The prior 2 days was a downtrend. So it's quite possible that today would be what? A downtrend. So I need to know that. So I'm going to write down what the overall trend is. The overall trend is down, okay? Depending on the color of your candle. So white could be green and pink could be red. So if you see a red solid candle, guess what? It's down, all right? So that's my overall trend. Now, what I want to do on my daily is I want to find what I call some critical points. So when I talk about resistance and support, I want some critical points. And critical points is basically looking at a year in review and finding some hard prices, okay? So what I'm going to do is, when this chart is first pulled up into the daily, it's pretty much showing me a 90-day time frame. This is one candle for the last, it's giving me, like I say, the daily over the last 90 days, because well, not necessarily 90 days, close to it. So what I'm going to do is I'm going to go up to these magnifying glasses. And what I want to do is I want to zoom out. So let's hit it one time. When I hit it one time, this is literally giving me the view of year to date, almost year to date. So we got January to May. So this is giving me a year to date review. I'm going to hit my zoom out one more time. So I hit it twice. Okay. By hitting it twice, I'm kind of getting, three times. Okay. So I hit it three times. So I hit it three times, and what it's kind of doing is it's giving me a look of 2020 as well as a look at 2019. So that's a good view for me to look at the critical points. Okay, and so what I'm going to do is first do resistance to support on a year view. That's basically what I'm doing. So what you're doing is, when you pull up your chart and you're on the daily one, you want to hit zoom out 3 times. And so what I'm going to do is I'm just going to do some basic resistance and support, the high. And what I'm going to do is, these are critical points. So the daily view is a large range. Okay, so I'm going to change the color. So I'm going to double click this line, right click where it says horizontal line properties. I'm going to change this to white. I'm going to give you guys this because it might make it a little bit easier for you. Okay, so this is white. And then I want to draw another horizontal line. So I got the top. I want to draw the bottom. Okay. I like to draw mines body to body. Some people like to draw wick to wick, and it's still good news in wick, but I like body to body, okay? So the next thing that I'm gonna do, just looking at this entire picture, I got my top, I got my bottom. Where do I see some levels where it seemed like price kind of stalled? You can kind of look at here and see. So I'm gonna draw right here. It looked like this was a price point. And look at here, you guys. Look. So this was a price point just based on the current action right now. It seems like it hit here and then it fell back down, okay? But if you look all the way over to the left, this was a critical price point in May of 2019. Remember how I told you history leaves clues? It's some people that don't believe that, but it's the truth. See, May 19th, that's a critical point. Right here was a critical point in February, and it's another major level of resistance right now. So where else can I possibly look? Well, let me look right up in here. It seems like these are multiple price points, so I can put it here. And again, these is all critical points. Okay. So this is a critical point. I see a critical point here. I can even go right here. It kind of seemed like 2 points was hidden. You don't have to, but I like to go right here. Just on a bird's eye view, looking up. What I see, even right here, it seemed like price went up here and then it kind of fell all the way down. Let me go ahead and put this in here. Wonder is this telling me something? Well, look to the left. Happened again right here. Happened again right here. It looks like right here, it kind of, this is a level. Seems like when it hit these levels, it automatically is going to fall down. So these whites are critical points. So I got my critical points already set up. This is on my daily chart. And now what I'm going to do is I'm going to go down and I'm going to look at my hourly chart. So I went from daily to draw my overall critical points. Now let's go down to the hourly. Now, when you go down to the hourly, you're not going to see all those lines. You're only going to see a couple of the points. So as you can see, these are critical points. Now, within these two critical points is where I'm going to draw some more resistance and support. Okay, so just looking at this, I'm going to draw another line, but I'm going to change the colors because I want you to be mindful of this. Now, people who are like swing traders, where they literally take a trade and they just leave it open, they're really trading off of what we call critical points off the daily. So they will short here and just leave it open, let the markets do whatever it do over a course of time, and then finally it's going to get back to another critical point. And they'll make the money from here all the way down here. Okay, but obviously you got to be more experienced and you got to have the stomach for it to go through the ups and the downs, okay? But I want to draw some more lines. So I'm going to take my horizontal because now I'm on the hourly. And the one thing I see is I'm seeing this right here. I want to draw a line right up in here. That's going to be a level, but I'm going to change the color. So I'm going to double click, right click, horizontal line, and instead of white, let's make it blue. This might be a little bit easier for you guys to understand resistance and support. So I'll just use that blue. Okay, that's a prettier blue than what I've been using. Okay, all right, so what else I see? I saw with this, it tended to fall down, but then it made its way back up and then it hit here and then it went down. So I'm gonna draw a line down here. Here. Okay. And if you look at the current activity, look at this, y'all. It acts as resistance. Okay, so I got this here. I got this here. If I want to, I could draw another line. I usually don't have no more than maybe 2 lines in between criticals, 2 or 3 lines in between criticals, but I can go ahead and do this. Let me go ahead and do this because this is going to be another big price point here, right? Because I'm looking at this here. You see how it went up and then it fell back down? So that's a price point. So I drew the line here, and if I look over to the left, it pretty much was a price point before. Okay, you see it. You see it. Right here was the low, and this was a critical point. And so if you do your resistance and support before you trade, you'll kind of see where the market is trying to take itself. Okay, so as long as you stay in that view, you'll start to see it. You see how it went from this top critical line and it act like it wanted to make its way here, but it paused. And then it went up, it went down, it went up some more, but it didn't hit this critical point. If it hit this critical point again, it was going to fall down again because these are major resistance levels. So it fell down. And then the second time around, it actually hit this again. And you knew because this was a critical point that it was going to try to push up off this critical point. Okay, so this is basic resistance and support. The white is the criticals, and the blues in between is like some key points for taking profit as well as stop losses. Okay, so I got that down. I did my key points. I did my critical points off the daily one. Now I have done some key points in between these two big major moves on my hourly. Okay, now that I have done that, the next thing that I'm going to do is I'm going to set up my moving averages, because my moving average is going to determine how I treat these levels of resistance and support. So I'm going to go up to insert indicators, move over, go down to trend, move over, and I am going to select moving average. Okay, so the first moving average I'm going to set up is the 50. So the period, I'm going to type 50. The moving average method is always going to be exponential, and you're going to apply it to the typical price of HLC /3. Why? Because this is going to get you as close to real time as possible, as close. Remember, all indicators are laggers. Anybody tell you that an indicator is not a lagger is a liar. All indicators are laggers, but there are certain things that you can do to try to get you as close as possible. And so I'm going to change this color, and I want this to be magenta. And I'm going to click OK. All right. So now I got my line. This is my 50. 50 is my retail traders. The next thing I'm going to put is I want another moving average. So I'm going to go insert indicators, trend, moving average, and I'm going to change it from 50 to 200, exponential, typical price, HLC /3, and I'm going to change the color, and I want it to be gold. Now, you can have whatever color you want to. Just remember which one is 50 and which one is 200, okay? And then, of course, obviously, if you want a thicker line, you can always change the thickness of the lines, okay? But mine is already set, so it's there. And then I'm going to click OK, all right? So the gold line is the 200, which is the overall trend, which means the gold line represents institutions. That's when big money get in or get out of the markets, okay? The magenta line is the 50. That's our retail traders, all right? So not necessarily big money. So now that I got all that is set up, now it's time to trade. Now, here's the great thing. You can save, you save your template. So once you got it set up, you can save the template. Now, every time you close out of MetaTrader and come back in, it's going to bring your charts back up with your resistance and support. You do not lose your resistance and support lines unless you close out the whole chart. This is where you close out the whole chart. I don't want to do that. If you just hit the big X, which just closes out MetaTrader, it'll always open back up to your chart. But again, if you want to make sure you don't lose your chart, right click on the chart, click template, click save template, and name it. Come up with a name and then click save if you just want to guarantee that your template is always there. Your chart is already there. Okay, so now I'm ready. I know what the overall trend is because the last candle on the daily told me that we were in a downtrend, right? I got my moving averages on here. And just by looking at the moving averages, and this is just an hourly chart, what do you see? The price action, the current price action is under the yellow and the purple. What does that mean? Downtrend, 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 downtrend. So that means that I only want to do what? Be selling. I don't want to be buying. I want to be selling. So I want to take a trade. So when I trade on lower time frames. M5 is where I trade. If the movement of the candles is just too much for you, it gives you anxiety, you can do the 15-minute chart. Okay? But in this case, I want to do the 5-minute. And then what I want to do is I want to zoom in. So before I zoomed out, so when I did my resistance and support, I was zoomed out. Now I want to zoom in. So I'm gonna go back to my magnifying glasses and I'm finna zoom back in. So I hit it 3 times. Now you see how it kind of looks like this? Well, I want these to pop out on my chart. So I notice sometimes I have to go over here to the price chart, over here on the right, go to the price chart and literally put your cursor in the price chart and then move your mouse up. Okay, when you move your mouse up, you see how it popped it up on your screen for you? This is how you can do. Okay. And I usually shrink it down enough to where I can see the 200 and the 50. And obviously I can see my resistance here and I can see a critical point right here. Now, here is the thing. Before I even get into the zoom in, just going back to this again. Let's go back to 7 o'clock. I'm trying to think what time frame it was this morning. I think up here, this is the morning. Okay. So around 13 and 14 this is around the 7:30 time frame. Okay. The 7:30 time frame. I believe right up in here, this is when the markets opened at 8:30. This is around the time when the markets open at 8:30. Okay, so it's right up in here. Okay, so let's say I was looking at the markets pre-market. So if you're gonna trade the open at 8:30 Central, you probably want to be up at 7:30 and go ahead and do your homework and do your resistance and support. Okay, now again, if you saved your chart, your resistance and support never changes. It's there. Okay, so you can use resistance and support from the prior day. So as long as you don't close out your charts, it should pull it up again. All right. So let's say it's around 7 o'clock, 7:30. I did all my trades. I'm ready. There is a high probability that the market is going to short because when I looked at the daily, I saw a solid red candle, obviously. A pink candle, which means the price is going to go down. It's been going down for the last couple of days. So it's a high probability that the markets will continue to go in a downtrend. So I have that. The overall trend was down. Okay. Remember, these lines here is based on the 5-minute time frame. So based on the 5-minute time frame, this is around 7:30. The price was kind of above this, which made you believe that you should buy, right? Well, why would I not buy? Because of this resistance right here. This is resistance here, and it's coming from down up. So that means that when the candles are below the moving averages and make their way up, these are resistance, which means this is when you hit sell. So this is why I wouldn't buy, because even though it crossed up, it's hitting a level of resistance. So I know that it's going to short. So if I look at the first five candles, remember I told you guys right before the market opens at 8:30, if you look at the last 5 candles, there's like a little secret. So these are the last 5 candles. 1, 2, 3, 4, 5. So the last 5 candles was showing that it was moving up, right? What happens is always, usually when the market opens, it be the opposite, okay? And you had confirmation right here. Now, if you did not draw your resistance and support, you would have did a buy right here and then wondered why you were in the negative because you didn't draw. You cannot lose sight of resistance and support and the critical points. So resistance and support, again, is in the blue. The white is critical, which means it's usually going to be a big move to the opposite side, okay? And so at 8:30, this is what ended up happening. The market, the candles crossed below. So right here, if I'm looking at 7:30 and I see it's getting close to this resistance, I'm not trading at all. I'm just watching. I'm just watching, all right? And so if you wanted to take a trade, you actually would have took it right here because you knew it was hitting a level of resistance for the first time it crossed over. All the other times, it looked like it touched, but it didn't cross over. So once it crossed over a little bit and started to draw the wick, you could have shorted here if you wanted to. But I knew that the Fed chair was talking. So what am I doing? Nothing. I'm just going to wait and see what the markets are going to do. So after the markets opened, it started to make its way down. So what am I doing? As soon as the market crossed below the 200 and the 50, what am I going to do? I'm going to short because it crossed over, closed underneath both lines, and then the next candle opened below both lines. Even though it could push up, it's still going to fall back down, people. That's how these moving averages, they are so powerful. So I'm going to short. I'm shorting up in here. So when you short, you would have been in the trade. It went down. You were in the money. It pushed up. It moved sideways. It went down some more. You still in the money. Then it started to push its way up. Remember, when the majority of the candles are below both lines, even though it's going to go up and touch the 50, it's going to fall back down. This will always be true, you guys. It hit, and what did it do? It fell back down. Where is it making its way? To the next key point, right here. Here's the next critical point. Now, for most people, and this is the way the basics of resistance and support works. Normally, when price action hit this, you might have wanted to do a counter trade, which means you want to buy, right? That I do not do that when all the candles are below both lines. So I'm only looking to do what? I only want to sell. And so what I'm going to do is let the candles create its bottoms. So I'm just going to sit and watch it because I got it in up here. And if I missed it right here, when it tried to make its way back up and hit this 50, I could short right here because I know that once it went down underneath both of these lines and tried to make its way back up, it's going to fall down again. That is the nature of the moving averages. And if you sit back and watch it, you will see it happen, right? So if I missed it here, I would still short it here immediately. As close as it got to here, I'm going to go ahead and short. Even though it crossed over, I still hit short. And then it went down. Now, I'm not trying to get in front of the train and buy right here because I'm assuming because it hit this point, it's going to automatically go back up. No, because all the candles are underneath these two lines. So I'm not trying to get in front of the train. I'm on the train. So I'm going to let it keep going down. Okay. So once it went down, this line here is resistance. You're going to treat it as resistance. So that means when it crossed under and it went back up, what are you doing? Selling. Not buying, you're selling. Why are you selling? Because everything is underneath both of these. So you're going to treat these lines as selling opportunities. So you up here, you're trading across. Or you was up here You short it because when you're buying, this is resistance. It hit it for the first time. You could have hit sell here, but I prefer you wait until the candles cross the line. Okay, so it crossed below, short here, stayed in it, or you could have got out right here if you wanted to. You had another trade opportunity right here, because remember, when the price action is below both, even when it try to go up and touch the 50, it's going to fall back down again. So you could have got in here. This could be your second trade of the day. Added more lot sizes. Went on down, went on down, went on down. Now it paused right here. This is a take profit. So you could have rung the register and got out right here. All right. If it went back up, that'd have been fine. But you knew once it hit this 50, it was going to fall back down again. So you would have shorted and let it go right here. All right. As long as all the candles is underneath both, all I want to do is I want to short. So it crossed this level. And so if I took profit right here, when it broke past, I didn't jump in it again. All I want to do is short. So I'm not going to chase the candle. I'm going to let it come back to me. Where is me? Right here. So it went down. It went back up. I'm finna short. It came back to me. Short. You can caught some more moves right here. It came back up. It's going to ride this line here. Short. Down. Down. Then it started to make its way up. But this time, you see how the moving average is kind of going downward? Then I noticed the moving average started to move sideways. Okay, so what is that letting me know? It's letting me know that it might try to make a move above it. So I'm just going to sit back and wait. So guess what? Candle went up, crossed over, hit me. It came back to me again. Short. Went down. It's staying around this moving average, but it's not crossing below the moving average. So I'm waiting for it to do what? Come back to me. What did it do? Come back to me. Short. Went back down. Now it didn't cross back over. And you do it over and over and over again. Then it made its way back. Shorten. So the only thing that I'm doing is selling. What I'm not doing is taking these buys. You can, the more experienced you become, if you start to see, if you actually see a reversal candle, you could do a buy, but just know, whenever you do a buy in a downtrend, you are counter trading. That means you got a 50-50 chance of being right. If you just go with the trend and you treat these as take profits and points to sell again, you'll win more than you lose. So like I said, you took the trade after it crossed, because remember, once it crossed below both of them, there's usually going to be a strong move to the downside. Shorted here, you stayed in. You stayed in. It went right here, you short again. So now you got two short positions open. So you got more money in there. This could be your take profit right here. Take profit, close, ring the register. Now, the next thing you want to do is you want to look for an opportunity to short again, right? So what are you doing? You letting it establish its bottom and you letting it go back to you again. The same place that you took profit is now resistance. So resistance in a downtrend is where you hit sell, 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 sell. The only way this is going to cross over is it's going to have to be more volume. That means that a time period where a lot of money hits the market can push it over. So tonight, 1:30 in the morning, it could be enough volume to push it up and push it over. Okay, I'm not buying until the candles are above this line and this line. That's when I'm buying. Until then, all I'm doing is selling. So it's important that you understand the trend, because On some of you, when I see your screenshots, I'm seeing some buying and selling, but the whole market was a sale. So why are you buying? And even though you buy and you could get lucky, I don't want you to be lucky. I want you to win. Okay. So it's important that you understand this piece. Okay. So again, if I was going to trade live, I need my clicker to trade. So I'm going to right click, bring up my one click chart. So I got my one click chart. Obviously, before you trade, you need to establish your lot sizes. What I'm going to tell you, especially those who are getting ready to go live, I want you to take your first live trades at 0.01. And see, the reason why I didn't want you to trade large lots is because psychologically, it's going to make you overtrade when you trade on a lower lot size. Because what'll happen is you're going to be looking at your results and you're going to be like, I didn't make enough money. I only made $5. So I'm going to go out there and trade again because I want to make more money. And then the more you trade, you're going to start losing because you're going to stop paying attention to your moving averages. You're going to stop paying attention to resistance and support. You're just going to be jumping in candles. When that happens, you're going to lose money. And so what I wanted people to do is I wanted you to do 0.01, and I wanted you to get some consistent wins at that level. Once you can win consistently at 0.01, then you move up to 0.03. Then you move up to 0.05. If you can master 0.05, right, then you can go to 0.30. Then you can go to 0.50. Then you can go to 1.00. I don't recommend that anybody that go live right now start off at 1.00. Don't do that. Don't do that, especially if you're putting less than $500 in your trade account. Do not start off at 1.00. I want you to start off at 0.01, and then I want you to go up to 0.10. Then go to 0.30. Then 0.50. And then when you got over $1,000 in your trade account, then you can move up to 1.0. Okay? Again, so even what people need to understand is that even if you were making, you know, let's say you were only making $5 a day, because sometimes, you know, people really get caught up on that, and that's the wrong way to kind of look at it, okay? But if you only made $5 a day because you trading 0.01, right? And you only made $5 a day, and that's an extra $1,400 a year, an extra $1,400 a year by just making $5 a day. So those little wins can add up to big wins. Now, if you trade with the trend, you should be making more than that at the 0.01. So even at the 0.01, you can make, let's say, $25 a day. You can trade 6 days a week, right? That's $600 a month. That's $600 a month. That's $7,200 extra a year if you just made $25 a day. All right. And so, like I said, it's important to me that you are consistent in your wins, and it's not about money. The money comes with confidence and skill level. Okay. And basically, this is how I trade. And so if I was looking at the markets right now, I would not trade at all. Why? Number one, there's not any volume in there. And number two, I'm looking to short. So I'm not shorting until these candles get a little bit closer to this line. As long as there's not a lot of volume in the marketplace, I'm going to be able to short right up here. And so what am I going to do? I'm going to wait for it. I'm going to wait for it. And until it happens, I'm not going to trade. I'm just going to watch. All right. And so again, what I do want to do really quickly, is to make sure people know how to set up, again, your take profit and your stop loss. Now, this is something that I do want you guys to know is when it comes to trading. And it doesn't matter if you're trading Forex, if you're trading futures, if you're trading penny stocks, you guys. Anybody who is day trading, you need to understand that there is somebody on the other end of every trade. When you buy, somebody is selling. When you sell, somebody is buying. And on each side of the trade, there is either a winner or there is a loser. So when you go into the markets and you take a trade and you win money, you won. Somebody on the opposite side, they lost. So when you lose, somebody on the other side won. So what does that mean? That means that when you go out there and you take orders, you place orders, people can see what your orders is, okay? You can see it, especially those who are paying for market depth, us people who are using like other platforms as well. We can see the market depth. We can see other people in the markets. We can see what other people are trading at. You can see that stuff, but people are paying for that, okay? But your trades can be seen. And the one thing that I know about stop losses is that your stop loss can be seen. And what that means is that people with big money can literally go out there, see where your stop loss is, and go and take you out. And so you got a stop loss that's set up. They can see it. They can run it down, take you completely out the trade by hitting your stop loss. And then it go exactly where you thought it was going to go. So anybody who have ever experienced that, you would know that, okay? So obviously people can see you. And so the more skilled you get, and as long as you don't trade around economic news, I don't always use a stop loss, okay? Now, in my other platforms, it's different things that people can do with other platforms, all right? But what I will tell you is that MetaTrader is still the best platform for trading the Forex. It really is. Now there's always different brokers, but the platform itself is always going to be the best, because many other platforms, they may not have the same brokerage, so they may not offer the same asset classes, okay? And so we're trying to get the best asset classes. That's why we're using Hugo's Way, and Hugo's Way uses MT4, and most of them do, okay? So it's not super sophisticated, but it still do the job, okay? So I want you to be mindful of that. People do see what you're doing. And so sometimes you'll get in a trade and you feel like somebody is watching me. I know where it's going, but for some reason, as soon as I get into a trade, the opposite happens. And then as soon as I get out of the trade, it go back to where I thought it was going to go. Why? People can see you. People can see you. And so that is why when I am trading and I'm trading live money, I am trading when there is a lot of volume. Why? Because they ain't paying attention to little old me. That's why you trade with volume. I don't trade right now in the evening because it's less people in the marketplace trading, and they got time to play around with you and your money, right? And so that's why for many of you, when you win, you're winning first thing in the morning, or you're winning in the middle of the night after 1:30, because that's when all this volume rushes in, and all you got to do is get on the train. Do not try to figure out where it's going. Go with it. So as long as you're mindful of where the candles are to the moving average, okay, you know you're in a downtrend. So all you want to do is sell. Wait till when you can sell. Wait till when you can sell. Now, if you notice, the moving average and crossed over our little resistance here. You see that? It didn't cross over our resistance. So eventually, when a candle crosses over this 50, it might eventually break this level. It might break this level, and depending on where the yellow line is, by the time that happens, it might be another short or it might be a breakthrough on up. So hopefully in the middle of the night, once 1:30 session, the London session start to kick in, it'll push us right on through and move us right on up. But you never know. Okay, so you just got to wait for it. All right, so just be mindful of that. I want you guys to be smart traders. When you're hitting buy right here, you're counter trading. You counter trading. So you can hit buy and the market, that's not the lowest it want to go. It want to go down some more. So you'll find yourself doing a buy because you think it's going to go up and it keeps going down more. And so stop buying in a downtrend. And when you're in an uptrend, stop selling in an uptrend unless you see a reversing candle. So that's why you want to make sure that you print out the candlestick charts so that when you do see it, you're more confident in taking it. But if you don't see a reversal candle and you just short in an uptrend because you feel like you want to, 9 times out of 10, it's going to go right past you and you are going to be in the red. So again, I want us to be smart traders. I want you to get on the train and ride it, not step in front of it and try to stop a moving train. That's what trend trading is. Okay, so even at a 0.01 lot size, if you catch that move as soon as it crosses over the moving averages, or you just wait, just patiently wait to cross over the moving averages, you still can make good money off of a 0.01, especially if you're using the US 30 and the, well, this is the US 30, so you obviously can make a little bit more money. Okay, so again, I want to jump in just to show you how to take a trade again, to set your take profits and stop loss. As a beginner, use your stop loss. But once you get your confidence, you understand the moves, you're paying attention to the economic calendar, take them stop losses off. Just be in front of your computer, and when it ain't going your way, you know when to get out. Take safe trades. You only take safe trades when you're following the trend. Okay, so let's say I just wanted to sell, right? I don't know if the market is going to go up. I don't know if the market's going down. I really wouldn't hit sell to right here. Okay, but what I'm going to do is I'm just going to hit sell. So let's hit the sell button. Why can't I hit the sell button? What is going on here? It ain't letting me doing nothing. Y'all, I don't know what happened. Something's wrong. With my Ninja Trader, I don't know what's wrong with the Ninja Trader. I don't know why it's not letting me take this trade. Who knows? Is it letting me? Do anybody know why this is happening? I don't even know why this is happening. This is happening for some dang old reason. And I don't
It's happening to me too. I don't know.
Okay, so it must be some technical issues. There's a technical problem, obviously, because you should be able to hit sell and buy, and for some reason it ain't. Who knows? I don't know. I don't know.
Angela, the same thing happened to me the other day. The stock market like froze up for a minute,
Okay.
and then it closed and came back.
Okay, so technical issues for some reason. I can't sell, I can't buy, whatever. But here, if I wanted to sell, just so you can get an idea, let's say I wanted to hit the sell button. And if I hit sell, my take profit would basically be based on another low point. I'm looking at another low point. So, dang, I can't do this, but I'm gonna use my horizontal line then. So this would be, if I was shorting, this would be one of my take profits. Okay, this would be one of my take profits. So I would have hit sell, drag the take profit to right here. This would be one of my take profits. So I'm gonna stay in until it hit this line or till I feel like it's giving me what I want. Okay, so this will be my take profit. Because I'm selling, if I wanted to do a stop loss, I wanted to take me out of a trade after a certain point. So what would my stop loss be? Y'all see, I was going to hit a sale. I would have been in the money. They didn't want me to be great. So if I hit this, this would be my stop loss. I would have my stop loss right here. Why? Because I know that that's the highest it went before it fell back down. So if it crossed this line, go ahead and take me out the trade. This would have been my stop loss. This would be my take profit. And it looks like my take profit would have hit, maybe hit, or I could just ring the register. I'm mad it didn't let me do what I want to do, but obviously Ninja Trader is having some issues. But y'all see where I'm going here? I'm shorting. I'm not buying. So I'd have shorted if it hit up here. And for this example, I was going to short, and you see a little white candle starting to form. I could get out the trade, or I could hold it open to see if it's going to hit my take profit. Okay, so you can use this as your take profit, and then obviously my critical point here, down here, would be a second take profit. All right, so that's pretty much how to do it. Now, what I want to do is I actually want to get rid of these lines here. I want to get rid of these. Okay, so there we go. And so you'll take your trades, and like I said, you also want to have your trade journal. You need to track your trades every day, especially if you live trading. What I will do is I will put together like some type of Excel trade journal for you guys. I like to track my trades like with notepad, pen and paper, but I'm going to do an Excel one for people who might want to use Excel to track your trades and see your overall profitability. But basically, when I'm tracking my trade, I'm putting the date, I'm putting how I feel. You know, was I in a good mood when I was trading? Was I in a bad mood? What time did I trade? Was it an uptrend or was it a downtrend? What time frame did I trade off of? What was the lot size I trade off of? When did I get in and when did I get out? What was the price points when I got in, got out? How many pips did I get? What was my profit? Did I win or did I lose? What was the profit? Like I said, over time, you'll start to pick up on your mannerisms, your emotions, and when you win, go back and look at when you win. You may find that you win at a certain time every day. So guess what? You don't go against it. You don't go against it. So you trade based on your win ratio. Okay. So that's pretty much what I would do, you guys. And I just trade. And when I don't see my trade, I don't take it. But like I said, all I'm going to do is short because right now, still, all the candles are below both lines. I will not take a buy until the candles are above this and this. And preferably when this 50 crosses above the 200. So when this magenta line crosses above the yellow, that's when and only when I would take a buy. Okay. And then I'm going to let resistance and support determine my buys. So when it crosses up, so let's say, for example, let me use this. I'm going to draw a horizontal line right here. So let's say the price action crossed up above the here. Okay. So let's say the price action crossed above here. It crossed over, it's over the 50, it's over the 200, and I'm buying, okay? So at that point, I will be in an uptrend. So I'm going to buy, and this will be a take profit. So I'm gonna do a take profit. Once the price action crosses this line, this becomes my support, and I'm gonna buy from this line to make its way up to my next take profit. So I'm not selling right here. I'm only doing buys. I'm only doing buys once it crosses over and the next candle open up above this line, I'm doing buys. As long as the candles are above the 50 and the 200, I'm buying off this line. Okay, so when it's coming from the bottom up, take profit, then buy off the line. Take profit, then buy off the line. When the market is in a downtrend, these are take profit, short off the line, take profit, short off the line, short off the line, short off the line, short off the line. Okay? If you can understand that, you will win. And so, like I said, this weekend, I will drop off a checklist so that you can kind of just check off to make sure that you're going through your proper steps before you trade. And like I said, if you want to get your money's worth, if you want to win more than you lose, you're going to go through this before you take your first trade. Don't just open up your charts and jump in a trade. It says, do I click buy after it crosses above? Yeah. So let's say it's only if it's in an uptrend. So if the market is in an uptrend, so let's say I'm starting down here, okay? And I'm going past these two lines. So the candle's got to go past these two lines. It got to be above here in order for me to even think about buying, okay? So if I go in for a buy, this is my take profit. So I buy here, get out here. Get out here. That's my first take profit. Once a candle gets enough volume to push through, I'm going to let the candle push through. I'm not going to buy yet. Push through, let it close, and I want to make sure it closes above this line. And the next candle that opens up, it opens up above this line. What does that mean? That means that this becomes a level of support. So I'm going to buy low. So I'm buying off of the support, with this being my next take profit. Okay, so let's say you miss it or you hesitate. Okay, it crossed the line, the next candle opens up above the line and it pushes it way up, but you didn't get in. Wait for it to come back down, it hits support again, and then hit buy and make this your take profit. It will go in your favor as long as the candles are above the yellow and the purple. All right. The same thing when the candles are below. You can obviously see these candles are below these two lines. So what does that mean? These lines are take profits. I'm shorting. When the candles go below this line, I'm taking right here. I'm jumping in. I'm shorting. Take profit, which means I'm out. Take profit. When the candles go up on these moving averages, it's still going to fall back down. Short. Take profit. Okay? Or you can short and you can leave it open and see what it do. It broke down. It broke through all these levels. Because if you were buying, if you were using these to buy, you in the red. So if you buy right here, you're in the red. If you buy right here, you're in the red. So you don't want to be buying because the candles are underneath these two. So it's telling you just short. So if you're buying, you're counter trading. You in the red. If you buy here, you're in the red. You buy here, you're in the red. You just want to follow the train. So I'm shorting here. Take profit. I could short again. Take profit again, or hold it open because this candle broke through. So leave it open because you in right here. So you're still in the money. You got time to see what this gonna do. So you in again. So what's my next take profit level? Right here. Or because I got in way up here, I can hold it open to see what it's going to do. What did it do? It broke through. Don't jump in front of the train, ride the train. And it went down to here. Now it didn't hit a critical resistance. This is critical. It stopped right here and it started to move up. So this was take profit. This is take profit. It started to make its way back up to my take profit zone. This is me. It's coming back to me. Short. Why am I going to short? The candles are still under both lines. It's not about where you think it's going. It's where it's going to go. The moving averages is telling you where it's going.
Hey, Angela.
Yes.
Hi. Hello. How are you? Hey, Angela. Sorry for interrupting. Hey, so like, for instance, like all the way in the top, like, was it May 13th, something, you know, all the way in the top?
Mm-hmm.
You see how they're above the 50 and the 200?
Mhm.
So like when that happens, when it's trying to make a decision, like when it's, you know, how it's going down underneath the, you know, it's going on a downtrend or whatever.
Mhm.
Once it gets to the, I think 1540 hour or whatever.
Mhm.
So it usually goes sideways, right? In order for it to make the decision. I just wanted to ask this question, you know, just to make
I mean, it depends. If it's bad economic news, it might go straight down. But a lot of times they do what I call the stair steps. It go down, move sideways, go down, move sideways, go down some more. And then it's going to try to make its way back to the moving average. That's just the natural flow of the movement of the markets. It's going to try to go here, but still is under this yellow line. Remember, this is the overall trend. Big money is not in the market. So when it goes up to try to get close to the moving average, it's going to follow the moving average on down. So it's going to keep going down. Now, right here, you notice that the price action creeped up above the yellow and the purple. Normally, you would hit buy. The only reason why I would not hit buy is you see how close it is to the resistance level? This was a predefined resistance level that you had already mapped out. And so anytime price action hits a resistance level for the first time, the natural flow will be for it to fall back down. So I wouldn't have took this buy. I wouldn't have did a buy unless it crosses over, stays above, and the candles after stay above this line, then I would have did a buy. And so when you saw this, always be mindful of your resistance and your support. See, if you just trade the moving averages and you don't put in your resistance and support, you have no idea that you finna run into a wall right here. So you will do a buy and you think it's finna push up and then it fell back down on you because you didn't understand that the wall was there. Also, this wasn't gonna push up and through because the Fed chair was talking. So the Fed chair was talking about some bad news, and there was some bad economic producer index news. So that means that when the market opened, it was going to fall down anyway. So you kind of got to be mindful. You got all these moving targets that's happening, but you never want to lose sight of resistance and support. Resistance and support. These bands were really close to resistance and support. So I wouldn't have did anything. I wouldn't have took the buy. I'm going to wait and see with volume what's going to happen. Is it going to push through? Then I'd have did a buy. If it didn't, 9 times out of 10, it was going to drop because I knew the Fed chair was finna talk, so I wouldn't have took it. But this, I am going to take. You see how it went down? And this candle, this is the candle that crossed over. This candle right here crossed over both. So that's your alert to pay attention. Now, let's look at the next candles. This next candle opened, went up a little bit, and then it just kind of fell. You see, kind of moved sideways. I'm gonna go ahead and short. I could have shorted on any of these. Any of these. I'm gonna go ahead and short. And then it went down. Take profit. Or
Okay. Sorry, sorry about that. You know, I just, you know, sorry if it's a dumb question. You know what I mean?
go ahead. You got another question?
No, I said I apologize. I said if it
Oh,
seems
okay.
like if it seems like a dumb question, you know.
Oh no, it ain't no dumb question. Every question is a good question. A dumb question is a person who got a question in their head and don't answer, don't ask, don't say nothing. That's a dumb question. So this is how you learn by asking questions. This is how you learn by asking questions. Okay. And like I said, I'm going to do a checklist that's going to make it a little bit, hopefully make it a little bit easier when you see it. The candle that split through the averages, I don't do anything. Y'all listening to me? I wait. Yes, you can. You see this? You see how it's, here's another example. Right here, the price action crossed over the 50. And yeah, I probably could have did a buy, but I'm not, because guess what? It's going up across a resistance. Now, if this crossed over and let's say this resistance line wasn't there, then maybe you could buy, but know that once it hit this yellow line, it's going to fall down a little bit more. So I'd rather just wait. I like for sure wins. I don't like to speculate. I like to just wait. Sometimes that means you gonna wait. If you want to win the most, wait. Eventually it's gonna happen. And if y'all watch the market tonight, you see how the yellow line is moving closer and closer and closer. Look, it's moving closer to the 50. It's moving closer. Eventually, this may cross under this line, this may cross over, and then it's gonna move up, you guys. Just wait for it. Just wait for it. Wait for the market to give you a signal. Don't take it just because, okay? It started way up here. Watch it. I want y'all to watch it tonight. Watch the markets and watch. Now, some of y'all probably go to sleep, probably sleep at 1 o'clock, 1:30 in the morning. But eventually you're gonna see it. Eventually you're gonna see it, and then you just take it when you see it. Okay, okay, so I'm finna wrap this up right now. There are two things that I am going to give you. And these are two indicators that I am going to drop in the group tomorrow. And you can add them to your chart. One of the indicators you can add to this chart, and then another indicator, you're basically going to kind of trade naked. As long as you know what the overall, you can put like the 200 moving average in there if you want to, but you don't want all the resistance and support. It's just basically trading candle action. Okay, so let's talk about the first indicator. Now, you guys, earlier I talked about adding the MACD. I found an easier indicator, and I bought it for you. I bought it. So you guys, I'm just going to drop it in the group. So instead of using a MACD, I want you to use this indicator, and I think it's going to make it so much easier for you. So when I drop an indicator into the group, I'll probably put it under files. So tomorrow I'll put a notification that I put it in the files area. So don't text me and ask me when I'm going to put it in there. You're going to know it. Okay. So I'm going to put the indicator in there. And what you're going to do is you're going to download the indicator to your desktop. Okay. And let me show you how to do that really quickly. Let me show you how to add an indicator to your MetaTrader. So I'm going to put the indicator in the group. And what you're going to do is you're just going to download it. So you could just copy, paste it to your computer. All right. So if I go to my computer, here is an indicator. So this is an indicator. So what I will do is once you download the indicator to your desktop, you're going to right click and you're going to click copy. Okay, you're going to right click and you're going to click copy. Okay, you could type your question in there, Randy. All right, and so I'm going to go back to MetaTrader and I'm going to go File, Open Data Folder. And after I go to File and Open Data Folder, I'm going to go to MQL4, which is the folder, MQL4, double click. I'm going to go to Indicators, double click. I'm going to right click and I'm going to click paste. Okay. Once you do that, your indicator is going to be in MetaTrader. After you paste it into this folder, you're going to close out MetaTrader and open it back up. Okay. When you do that, you are going to see your indicators on the left-hand side in your navigator window. So you're going to be able to scroll down and you're going to see all your indicators. I got tons of indicators. I'm testing so many different indicators. A lot of them be garbage. But it's one that I do like that I think will help you guys. And it's better than just the the MACD, because what I want you guys to be is I want you to be crystal clear on the trend so that you will stop trading against it, okay? And so I'm going to give you a trader, and it's going to be called the Guardian Trend. So once you import it into NinjaTrader, close NinjaTrader, open NinjaTrader, you're going to see it listed. It's going to be called the Guardian Trend. So what you do is you click on the indicator and hold it and drag it over to your chart and release. Now, when you do that, it's going to open up this window. And the only thing I want you to change is the color. Sky blue means that price is going up. Red means the price is going down. I want you to change it from sky blue by double click, hit the drop down box, and just make it green. Can we just make it green? Whatever green you want it to be, just make it green. And then click OK. All right. Once it's added, you're going to go right here. You see how my bar allows me to bring the bar down. I don't need it that big. I'm just going to drag it down some. Okay. So what is this telling you? When you see all red, what does that mean? That means that you only should be shorting. That's all. Just short. Just short. Look at this. Up here. If you miss this, you know you're still shorting. You're shorting. It went to the moving average. So you see how it kind of moved up right here? You see the S&P 50? Short. Just short. Go to the line. Short. You guys, just short. This will help you stick on trend, okay? So instead of buying, where can we watch the market from? You watching the market now. The market is actually moving. The market is actually moving. Well, it ain't necessarily lingo. You would actually have to listen to the Fed chair talk. So if the Fed, so for example, when I knew the Fed chair was talking, I turned on CNBC so I could listen to him talk. And basically what he said is that the economy right now, even the long-term economy, concerns him. Okay, so when he say concern, what that mean? Bad, right? He said that the unemployment rate is going to move higher and for a longer period of time. So what does that mean? Bad. And so that means that when the markets got to going, what was they going to do? Short. The market was going to short. Short means sell. When you're looking at the economic calendar, especially when there's going to be economic news like, so if you look at the economic calendar today and it talked about the production index, it gave you a number of what the estimate was going to be, and then it told you what the actual. If the actual is worse than the estimate, then that's what? Bad. Okay? Same thing with the jobs number. Now, for some reason, the opposite been happening with the jobs, and it was supposedly because the markets had already put into effect in the pricing that the economy is bad, that employment rate was going to be high. There's going to be some job numbers tomorrow in the morning. We look at it and look and see how the markets react to it. Okay, so just based on this, the only thing you need to be doing is selling. Now, what you notice is the longer the bar, that means when more money gets into the system. The longer the bar, the more the move in one direction is going to be. You see how long these bars is compared to this bar gets smaller? You see this bar right here? You see how small these bars are? This is also letting you know that the market is moving what? Sideways. You can see it right here. It's moving around the 50. It ain't doing no big moves up. It ain't doing no big moves down. It's kind of like moving sideways up along here, but it's still red. When it crosses over and become green, 9 times out of 10, when you see that, it's going to be when this price action and cross the 50 and the 200. So then you know to start getting in position to get ready to do what? Buy. That's it. That's all, y'all. That's it. That's all. And so all you got to do is, let me see. So when I say watch the markets, I mean you're in the markets now. Even if you're on a demo account or you live, this is the market moving right now. It never stops. Okay, it never stops. And so when I say watch the market, just sit and watch the chart. You see how the lines are getting closer and closer together. Watch it happen and watch how the candles move. And everything will make sense to you. Okay, but you got to sit and watch it. Sit and watch it. Okay, so this is an indicator. And so what would you do? Now that you got this indicator on your chart, you're going to right click, hit template, save, and you can literally resave it over the name that you originally did. So you don't have to keep making it different names. You could just save over, just type in the name that you had initially and click save, and it will override it. Okay. And so this is something that I believe is going to help you. Yeah, the time down here, remember, this is a international brokerage. So these are international time frames. You're looking at, the only thing you care about is the time that's on your phone. Okay, and so if you watch all the if you're new and you go back and you watch the videos, like I said, the class will reset on Wednesday, and we're going to do this all over again. But I gave you guys the time frames when there is money in the system. That time frame is based on the time that is on your computer, the time that is on your phone, not the international times. You don't even care about the times that's listed down here. This doesn't matter. Pay attention to the time that is on your computer and the time that's on your phone. Okay? And you're going to see when volume comes if you sit and watch the markets. So this is the end of this trade strategy. Again, this trade strategy is just simple, using moving average and moving and resistance and support. Resistance and support has never been wrong, you guys. Now, I haven't decided what day I'm going to do it, but it's going to be on a Saturday. I have to decide when I got time to do it. I'm going to do one more class on a Saturday talking about fibs. And I'm going to do one more class. And like I said, it'll be on a Saturday. And it's just to go into a little bit more detail of currency pairs. But what I wanted for this class is I wanted to keep it indices, because I wanted you to be able, to trade fast. And one way to do it is to keep it simple. And indices is simple, you guys. It's simple. Remember, another thing that can affect the markets is because we're trading the S&P and we're trading the Dow. If you're watching CSNBC, you know the companies that make up the S&P. You know the companies that drag the Dow down. So when those companies like the airlines take a hit, Boeing take a hit, it's going to drag down the Dow. So you always want to be mindful. Okay. Do anybody have a question? Okay. All right. So one last thing that I'm going to show you, and this is another way to do some practice trading, but also it helps you start to identify chart patterns. Okay. And so make sure that when you set this up, make sure that you trade it. Okay. And so what I'm going to do right now is I'm just going to pull up I'm gonna pull up a basic chart. Okay, so I'm gonna get rid of this. Well, I'm just gonna open up US 30. Y'all know y'all can have multiple charts set up for the same asset class. So right now we are US 30. So I'm gonna pull up another one. So I'm gonna go to US 30. I'm gonna right click. I'm gonna click chart window. I want to open up a new window. Right click. And I'm finna go and I'm finna find my template of my clean chart. Okay, so I got my clean chart here. Now, the next thing that I'm gonna do is I'm gonna drop a second indicator, and this indicator is gonna help you try to identify candlestick patterns, so that you can learn it and you can kind of learn it in real time. You can practice, if you want to trade it, practice first. I want you to practice first. Don't just trade it live with this. I want you to practice, okay? So I'm going to drop another indicator that you're going to import into your MetaTrader 4, okay? Now, with this indicator, well, Rachel, if it's more volume, they not necessarily paying attention to your stop loss. But if you're going to get up and walk away from your computer, have a stop loss. Please have a stop loss. You cannot trade and walk away, you guys. That's not what we're doing here. If you need to get up and walk away, have your take profit and stop loss already in so you can get up and move around. But I do not recommend trading naked and you're going to get up and walk away. Okay? Don't do that. All right, so the last one that I'm going, indicator that I'm going to drop in the group tomorrow that you're going to import into your system is, what is it called? Candlesticks, candlestick alerts. This is a cool one that I had bought that I could share. And the only thing that I need you to do, don't change anything on these indicators besides the color. But on this indicator, I want you to go to inputs. Oh, no, never mind. Disregard what I just said. Don't do nothing. Don't do nothing. Just hit OK. Just hit OK. All right. What this is going to do is it's going to label the candles for you. And it's going to give you what? Some arrows. And so what I'm going to do is I'm going to go to my 5 minute. Oh, and it'll alert me and let me know that a dark cloud is coming. All right, so this is the 5-minute chart. So again, I want to go over here in the price chart with your cursor and move it up because I want to zoom in on the price action. There we go. There we go. All right, you guys. So what is it saying to you? Bear cross is giving you the arrow to go down. If I scroll over and look at some other price action, let me look over. Let me go. You got a bull cross here that was telling you to do a buy. Right now, so that you know what these mean, then obviously you need your candlestick chart. You see a dark cloud here. Same difference, you guys. Same difference. And so this is something that you can practice with. I think it's really cool because it allows you to see what candlesticks do and the relationship to where it happens, and it pretty much draws a line. Now, if I was going to trade candlesticks, let me go to the end. Now, if I was going to trade this, the same thing that I'm going to do is I'm going to go over and I'm going to pull over that, I want to pull over that trend again. Pull over that trend. Make sure this is green. That's the only thing I want to change. Make sure it's green. Click OK. Okay. Pull it down. Move it down. Okay. All right. Now, going back at it again. So if I wanted to trade these candlesticks, I am only going to take an arrow that is red. Okay. So that means if I know the overall trend is red, I'm not taking any buy signals. If it give me a buy signal, I'm not taking it. I'm only going to take red signals. That's it. That's all. So as long as you are trading with the trend, you're more likely to always win. That doesn't mean that, yes. Now, if you see a strong reversal candle, yeah, you can counter trade and do a buy and move it up. Okay. But I'm just saying, if you want to win more than you lose, red, only take the red signals. Okay. And this is the same if I looked at the daily. If I looked at the daily, it's been telling you when it first was finna start, the market was gonna start crashing down. It told you right here. Got a bear engulfing way up here. And that was way back in February. And that's when the markets did crash. That's if you were looking at the daily. If you were trading an hourly chart, okay? If I trade an hourly chart, we had some, oh, I'm way back. Let me go back. Okay. So if I'm looking at an hourly chart, right here, it told me when to sell because I'm only worried about selling because right now, that's where I'm in. Okay. I'm only worried about selling because I know the overall trend. Okay. And it even gives me a little announcement that's telling me what's happening to alert, to wake up, pay attention, look at your charts. Okay. Now, I do not put this with resistance and support and with moving averages and all that because, especially resistance and support, because you're going to have so many lines. I don't know what I did here, but it's so many lines that it's going to be kind of all over the place. So that's why I don't put resistance and support in here. Too many lines. Okay. Now, what you can do is, even though this got the trend, if you just wanted to be on the safe side, you can put a moving average on here if you want to, but really you don't need to because it's telling you the trend already with the 5 minute and you only taking these. Now look right here. It told me that right here, there's a bullish engulfing candle. It told me to buy right here. But if I look at my other chart, look, even though it's telling me to buy, it's finna hit this level of the 50. So I'm not gonna take it because I'm gonna buy and it's finna hit this and it's finna fall back down, okay? And so you always, like I say, always be mindful of resistance and support, but only take the signals based on the trend. You're more likely to be right and you're more likely to catch a wind, okay, you guys? So I'm gonna drop these 2 indicators in the group tomorrow. You guys, it is so many indicators that can be used to trade Forex. You know, that's why a lot of these companies that charge these ridiculous $100, $200, $300 monthly fees, all they're doing is taking all these indicators and they're putting them in a library. But it's too confusing, it's too much stuff, and people never really start trading. So I want to keep it as simple as possible. My strategy of moving average, resistance, and support, if you master that, you can trade anything. Stocks, Forex, futures, it does not matter. And you can use this second indicator just so that you can start to learn what the candles look like. You know, and you will start picking it up over time. Okay. These indicators are only on desktop. And so that's why I said, if you want to make a lot of money in trading, you need your computer. Now you can use your computer and take a trade on your phone. But the only thing about the MetaTrader platform is your indicators are not crossing over into your phone. So unfortunately, but that's how it works. Okay. So that's it. That's all, y'all. That's it. That's all. And like I said, the more that you watch these videos over and over again, everything will make sense. Like I said, this weekend, I will give you a checklist that you can use when you're trading. Again, the people, can you cancel? You can move it. I mean, it's part of your trade. I don't think I've ever canceled a stop loss. I just moved it. Well, Jose, I told you you could go live at the beginning of the class, but you must not have been on at the beginning. So again, the people, well, actually, you can go live when you feel confident enough to go live. But like I said, this is not a competition. Do not rush on live if you do not get it. If you're losing in paper money, you are going to lose in real money, okay? So I want you to be winning in paper money first, especially if you can grow your account an extra $500, an extra $1,000, an extra $2,000, then you're comfortable in knowing that you can do that in real money, okay? Again, start off with the lower lot sizes, 0.01. then go to 0.03, 0.05, then go to 0.30, 0.50, then do the ones. Because once you can match the ones, you can go to 10s, but you're gonna have to have a lot more money in your account. So again, take your time, you're not in a rush. This class will restart from the beginning again on Wednesday. And like I said, as long as you're in the group, you access it anytime. So you can always jump on me training this class again, because like I said, I always end up saying something that I didn't say the first time as we go. So again, some people gave me balances, some people didn't give me balances. The people who did give me balances, who I felt were ready, again, Sandra Johnson ready, Jose and your wife, y'all ready. Calvin Benito is ready. Danielle is ready. Tricia is ready. Carmen Corlez is ready. Chevy is ready. And so if it's anybody else that did not give me your balances, but you know you've been practicing, and if you feel like your confidence is there, go ahead and go for it. But like I said, once you go live, trade at the low lots, okay? And then work your way up. I will drop the document tomorrow. So tomorrow I'm going to drop the document on setting up your Hugo Way live account. So how to fund it. It is a process that you got to go through because it is an international brokerage company. They do ask for driver's license. They are going to ask for the front and back of credit card. They are, okay? So just know, and a utility bill, because they need to make sure that you're not trading on a stolen credit card. Bottom line to that, okay? I will drop the documentation tomorrow. I'll also drop the 2 indicators. So you'll get the candlestick indicator and you'll get the trend indicator. And then I'll let you guys know when I'll end up doing a Saturday training on fibs and another in-depth training on the currency pairs. And probably it'll be Saturday or Sunday, I'll drop the checklist so that you guys will have that as well. All right, you guys, I'll drop the replay probably tonight or what have you in the group. And I will see y'all later, and we start back again on Wednesday. So peace out, y'all. I had fun. Good night, good night, good night, good night, good night.
Good night.
Good night. Thank you, Angela.
Oh, wait a minute. Let me stop. Let me get a picture. I always forget. I know somebody somewhere.
No pictures.
Oh, Val, ain't nobody tell you to get on this train without your wig. You should have some wigs.
Oh, Lord Jesus.
With some wigs or something on. I'm sorry. Y'all know how I am. Don't be trying to close down y'all window. I see you. I tell y'all to come to training in scarves. All right, y'all. All right, now see y'all later.
Hey,
Okay, thank you. Good night, everybody.
Thank you, dear. Have a
What you
good
say,
one.
Jose?
I said training in face masks.
Yeah. Hey, that needs to be our next one. Everybody wear their face masks. That's going to be too much of a picture. All right.
Right?
Good night.
See y'all later. Bye-bye.
Bye.
Take care.